Alright, welcome back to another video. Today we're going to be reviewing the market for this upcoming week coming up here after September 15th, 2024. Now, in my last video, I realized that I was kind of yelling into the mic, and also my mic was backwards, so I'm going to try and be a little softer with my voice, try to be a little bit more consistent with how I talk. And each one of these videos, I'm going to get a little bit better. And we are all going to get better by analyzing the market every single day. Now, in my weekly recap, I discussed how this is actually essentially a 12-hour breaker block. And price is fractal, so yes, you can use the 12-hour. So 12-hour breaker block. Price pushed back into this 12-hour breaker block, and we talked about as well how this is a weekly order block, this is a weekly breaker block, and we discussed how there was an SMT here. So, what happened next? Price the next week after we got this SMT proceeded to crash all the way down to this breaker block, and we got a reaction. Now, what I failed to realize last week is that we actually have a ton of buy-side liquidity left. We have these equal highs up here, which are very clear and they're hard to miss. And we also have equal highs right here. So where does it look like the liquidity is right now? Looks like there's a ton of liquidity resting above these highs, and then you have this daily fair value gap. Now, what I think is really interesting about this daily fair value gap is this daily fair value gap aligns with this order block mean threshold. Which is aligned pretty well above these weekly equal highs. So we have this mean threshold. If you guys don't know what a mean threshold is, I will make a video on mean threshold soon, both on my TikTok and YouTube. But essentially, it's just the midpoint of an order block measured from the candle bodies. And you just measure it, take the midpoint, don't include the wicks. And a lot of time it holds pretty well. So you have this order block mean threshold. And so essentially what I'm expecting is, now that we've came back up, reacted off of this, it seems to me that this is lower resistance liquidity right now. And now, obviously, I could be wrong. I was wrong last week. I was totally wrong last week. But every week, I'm going to get better, and I'm going to help you guys get better with me. And we're going to keep getting better week after week after week, analyzing price action. And every single week, we're going to get a little better, and we are going to get a little bit more effective, so that way our trades during the week can be just a little bit better, because we'll have an idea of what we are expecting for the whole week. So there's this low resistance liquidity, and we inversed this daily fair value gap. Now, I know we inversed this weekly fair value gap last week, and I was freaking out, and I was like, we have to go down now. But what I said in that video is we took out this weekly swing low, and we pushed into this 12-hour breaker block, and we had these relatively equal highs, which I failed to realize in that whole video. So something else that I think is really interesting is, let's say the NQ runs this buy side, we run this buy side, push into this daily fair value gap, we push into this weekly order block. Let's say that this happens, right? So this area, let's get rid of everything else so it's not overly complicated. So this is the area we're talking about. Let's say NQ pushes up into here. What would that mean? Let me pull over the S&P 500. If the S&P pushed up higher and took out this high, and took out all-time highs, while the NASDAQ doesn't take out this high. Let's say this happens, we push into this daily fair value gap, push into the mean threshold, and we sweep this high on the S&P. What would that leave us with? It would leave us with a giant SMT. So I'm going to draw this out so it's a little clearer. We got that. And then let's say we push into this mean threshold, right? Push up, react off the mean threshold, boom. What does this leave us with? This would give us this huge SMT, this huge bearish SMT, which would allow us to take out this previous month's low. Now, obviously, I could be completely wrong, but that's the whole point of these videos, is we are going to keep getting better. So leave your analysis in the comments below. Tell me what you think. Tell me if you think I'm completely wrong. Tell me if you think my analysis is good. But we are going to keep getting better at this week after week after week after week. And it doesn't matter how long it's going to take. We are going to get good at analyzing price action week after week. So, like I said, this is a previous month's low. I said this in the last video, previous month's low. And so, if I measure this move, this final move higher, standard deviation, what do you notice? This negative 2 to 2.5, and I said this in my last video, this negative 2 to 2.5 area is resting right below this draw on liquidity. What a coincidence. So this 2 to 2.5 standard deviation area is resting right below this draw on liquidity. And what is this? This is low resistance liquidity. So if we get this giant SMT, and then potentially, what if we form a inverse fair value gap back down to the downside? I mean, this is pretty speculative at this point. But this is where the liquidity is. This is where it seems like it is to me, right? It seems like this is low resistance liquidity. And if we sweep this high, this would be high resistance liquidity. Now, obviously, this is liquidity too, but if we do kind of sweep this high, I would expect this to, and we push back down, then I would expect this trend line liquidity, low resistance liquidity, whatever you want to call it, this would be the target. So this is like that 2 to 2.5 standard deviation area. You have this low resistance liquidity. This is totally speculation right now, but if this happened, it would make a lot of sense. You'd push into this weekly order block, you push into this daily fair value gap, inverse back to the downside, possible run of this low resistance liquidity. But to me, it seems like this low resistance liquidity will get ran at some point, and I'm anticipating at some point in the future. And you can see, if I pull up the monthly chart, it kind of becomes a little bit more clear. We have already failed to respect this order block. It's wicked so far into this order block, and now I could be wrong. It could have pushed as I review price action week after week. I'm gonna get better at this, so bear with me if I'm wrong about this order block. But we pushed so far into it, it seems to me like we pushed way past the order block. Like we pushed way past the mean threshold. It doesn't seem like this is going to be valid anymore. And so where is the draw on liquidity? To me, it's this monthly fair value gap. And it also aligns with this old bearish fair value gap. Now, I don't really know what that concept is called where you use an old bearish fair value gap, but it is super powerful. And I'll show you an example on Bitcoin real quick just so you really get the idea of it. I can't remember what it's called. It's kind of different than a BPR. It's like an old bearish fair value gap, but it's like a reverse BPR or something. But you can see right here on Bitcoin, actually I think it's on the monthly. Yeah. See how this monthly old bearish fair value gap is where price came back to? I don't know what ICT concept this is. If anyone knows, let me know, but I've seen this happen work too many times in price action. It's something. So now I could be wrong, but it could be just speculation, but I'm pretty sure that is a legit thing. So that aligns exactly with this monthly fair value gap. And so this to me just seems like a ton of liquidity right now. And it seems like this order block is failing. To me, this seems like where price wants to go. And then at that point, I'm not really sure. It would seem like at that point, maybe we go higher because this is like a giant 3-month order block, and probably continue higher at that point. You see this is a 3-month fair value gap. Yeah, this is like a 6-month order block, yearly order block. So like this would kind of be like if we get some kind of recession scare, or maybe some kind of a recession, this would be the idea. But I'm not going to be biased. I don't know what's going to happen. But to me, it seems like the draw on liquidity right now is lower because there's all this low resistance liquidity. So we'll see if I'm wrong. We'll see if I'm right. But it's fun to get better at this week after week after week. And I hope to continue getting better over time. Everyone in the comments, please put your analysis and what you think is going to happen. And every week, I'm going to get better at doing these weekly outlooks. So bear with me if I'm wrong. There's a good chance I will be again this week. This week for reference, I think we're going to go higher and take out these equal highs, and then push lower and eventually go down to this monthly fair value gap. But I already said essentially what I think is probably going to happen. We are going to see if I'm right, if I'm wrong, but every single week I'm going to get better, and you guys are too. So I will see you in the next one.